Hi guys, I'm Rich. Let's go through my top 5 things to watch for the week ahead in markets. Number 1, Fed reaction. The Federal Reserve hiked interest rate hikes by 50 basis points and signaled more hikes to come next year, as expected. An expected terminal rate of 5.1% meant the market interpreted it as slightly bullish despite the smaller hike. The immediate reaction in the dollar was relatively muted, but it did fall below some support levels. The euro-dollar pair broke out above 1.06 and the pound-dollar took out 1.23. The bigger reaction was in stocks, which erased daily gains to finish basically flat and left them almost exactly unchanged over 30 days. Number 2, Eurozone data. PPI and GDP data can be very valuable for traders, and both are released this week. German PPI data is out on Wednesday and forecast to slow to 2% year over year in November from 4.2% in October. Later in the week, Italy and France release their respective PPIs. As traders prepare for Q1 of 2023, the UK reports the final version of Q3 GDP on Thursday. Number 3, BOJ rate decision. The most dovish of the major central banks makes its final rate decision for 2022 on Tuesday. All of the economists polled by Reuters expect no change in policy at this meeting. That means a negative interest rate and yield curve control. A major correction in the dollar-yen pair has taken some pressure off the BOJ to make a hawkish pivot for now, but there is talk of a likely policy review in 2023. Number 4, PBOC meeting. China has been at the center of global growth concerns over the past month, with Chinese authorities enforcing, then seemingly backing away from, their zero COVID policy. The policy has clearly damped economic activity, so the expectation is that the PBOC will keep offering cheap loans to specific industries, but avoid cutting rates across the board, which could fuel inflationary pressures. The meeting could go by unnoticed by markets, but any hint of a stimulus bazooka would likely be warmly welcomed. Number 5, core PCE inflation. The major data point for the last full week before the holidays will be the Federal Reserve's preferred measure of inflation. Core PCE is expected to fall to 4.6% year over year from 5% previously. Elsewhere, the final iteration of US Q3 GDP data and US durable goods orders for November are released Wednesday and Friday respectively. Durable goods orders are forecast to have stalled in November at 0% following a 1.1% monthly rise in October. You can of course click on the link in the description below to see the full economic calendar with the previous month's data and the consensus expectation for this time. But for now, thanks everyone, good luck trading this week, and please remember to give a quick smash of that like button and hit subscribe so you don't miss more content like this when it's released.